Go for it.
Hey guys, it's Adam, not Gary. So apologies that you haven't seen Gary yet. We're at 23 participants and climbing. I'm new to the intro, so I'm going to do my best efforts here. And sorry for being a couple minutes late. Gary appears that he's having technical difficulties on his end. He's going to dial back in and hopefully moderate us. Otherwise, I'm going to try my best to fumble through this while doing the Q&A at the same time. So in terms of okay, there he is. In terms of what's changed and what's not changed, nothing's really changed too much since last week, other than the bill's all the way through, and now we have an active thing that is the extension of time, which is down to 24 weeks. We have some leeway in terms of the FTE count, in terms of how you get back to your FTE count. We've got a modification of terms up to 5 years, which is great. Then, outside of that, the only other thing that really stayed the same is that the application deadline for loans, I believe, is still June 30th, based on a joint release from Secretary Mnuchin and the director of the SBA. So, not a whole lot's changed last Thursday, other than it's officially official. So with that in mind, I'm going to go ahead and turn it over to Gary to go ahead and start the moderation with the question.
All right, cool. Hey, thank you, Adam. Sorry, everybody. This is the PPP Flexibility Act, and we're having to learn to be flexible. And for some reason, my technical difficulties have tested my flexibility today. So here's the first question that's in from Bob. And the question is, actually two questions. How do you see businesses treating the PPP money after forgiveness? Do we show it as income because the loan was forgiven, or do we simply not deduct the appropriate payroll, rent, and utilities expenses that we use the PPP money for? So that's question one. Go ahead and answer that one if you would.
Yeah, so from an accounting standpoint, it doesn't really matter, I don't think, if you do it as you go along or if you do it at the very end once you receive forgiveness. I think the treatment's ultimately the same. And I don't believe there's been any sort of FASB or GAAP pronouncement on exactly how to do this, so we're winging it a little bit when I give you this advice. But what I would do is I would keep the expenses the same. So I'd still keep the expenses in the correct categories of where you would deduct them. So it still shows payrolls, payroll, rents, rent. So you've got historical representations of what you spent, which is also going to be important for your banking partners just to see your historical performance. It's also going to help you if you ever have a case to make in terms of what you spent during the downturn versus what you brought in. Then my offsetting entry, which would be an income statement item, would be I would just book as other income PPP loan forgiveness. So it'd be a below the line one-time type of item that I know that I would have as an add back for the purposes of any covenant calculations or anything else that I need to be concerned with. So that's the way I treat it. When it comes down to the tax return, I'd imagine it's just going to end up being a book tax difference that flows through one of the Schedule M's depending on your size. So the tax return will show book income, and then somewhere probably in other deductions there's going to be a big negative number that ends up showing up called PPP loan forgiveness that's going to be added into your other deductions line item that creates a book tax difference. That's what I think is going to happen.
All right, cool, thanks. Next question is, and this is also from Bob, our fiscal year ends on 9/30/2020. If we spend the money this fiscal year and we get forgiven next year, how will that work on our return?
That's a really good question that I don't have an immediate answer to, but my speculation is that since it spans tax years, it's probably going to fall into the next tax year from a forgiveness standpoint. So you'd end up taking the deductions this year and then getting the forgiveness next year, assuming that's when it's officially granted. Only thing that I could see changing that potentially would be, since the return's due 3 months, 15 days after the end of the fiscal year, they may have some type of subsequent event thing that happens, possibly. Or it's also possible that they could say, what were your proceeds? What's your anticipated forgiveness if you haven't received forgiveness with some sort of true up mechanism in the subsequent tax year if it hasn't been granted yet?
All right, good. You answered this question. We got this one in this morning, but I thought since you answered this for Brian, there may be others that think of this same question. So I'm going to ask it so that everybody else can hear it. So the question is, as two owners of a new business that formed in January 2020, we're paying ourselves the annual equivalent of $100K each in quarterly increments with the next payment scheduled for June 30th. We're going to meet the other qualification expenses for forgiveness. So how much can we lower this payment amount by and not jeopardize our forgiveness? I know the original guidance said that you can't lower anyone's salary more than 25%. Ideally, we'd like to change our salary and pay us as little as possible for this next quarter. Do we have a problem qualifying for PPP under the $100,000 salary assumption and asking for forgiveness with the $25,000 salary if we cut the owner's W-2 payrolls and maybe pay it out as distribution later on in the year?
Yeah, so I think this you've got two pieces of guidance that this applies to. And I don't know if it really matters that it's a new business or it's an existing business. It's a case where you've got a company that's taking owner distributions and then also a W-2 salary. So the first fact is your max cap is $15,385, we think right now. So you can't exceed that amount on your reporting. So in this specific instance, there's no track record of what people paid themselves because it's a brand new company. So you're probably fine with going ahead and just maxing out at 15,385 and then stopping the paycheck for now. When it comes to existing businesses where there was a 2019 track record already, the guidance as it currently reads is you can't give yourself a raise. So if you paid yourself more than 15,000, this is just specific to owners, doesn't apply to employees, but if you paid yourself less than 100 grand in the prior year, then in theory, your max is going to be whatever the 8-week version is of your annualized 2019 pay rate versus $15,385.
Cool. Next question is up from David. And by the way, thank you everybody for for giving us some grace this morning for being late. That was my technical issue. I don't know still what it is, but nonetheless, we're making do. So this is from David. If a PPP loan recipient also received EIDL loan and grant, how, if at all, will that impact PPP forgiveness amount?
Can you reread that one, Gary?
Yeah, if the PPP loan recipient also received the EIDL loan or grant, how, if at all, will that impact the PPP forgiveness amount?
So what's supposed to happen is the amount of the grant reduces your forgiveness amount. So you would be left with a loan at the very end of $10,000 or whatever your grant amount was. The cap is $1,000. It's $1,000 for employee. So that's the loan that's left at the end. In terms of can you have a loan, an EIDL loan and PPP at the same time? Yeah, you can. A lot of our clients have had that. Remember that the original intent was you get the EIDL loan and then that would roll into a PPP loan, so you weren't supposed to request the same money twice. It just didn't work out that way for a lot of people because the EIDL loan came after the PPP loan.
All right, next question is, if we spend twice the amount of the original loan amount during the 24 weeks on qualified costs, can we submit the total spend for forgiveness? Thus, even if we have a 70% reduction due to headcount, we could possibly receive forgiveness up to the original loan amount?
No, the original, well, that's a good question. I'd have to go back and look at the application itself. So what happens is you put in your payroll costs, and then you reduce it by the FTE reduction quotient. And the loan forgiveness amount is the lesser of the original loan, the reduced amount, or your payroll cost divided by 0.75. So in this particular case, I think, in this scenario, I don't know how you would have spent twice as much money with the reduced headcount, because that implies that your loan amount was at a reduced amount, remembering that the $15,385 per employee is still the max. But I think in theory, if you spent twice as much on payroll but had reduced headcount, those two could potentially net each other the way the forgiveness application currently reads. Because the starting point isn't the loan amount. The starting point is, what did you actually spend on payroll during the cover period?
All right, next question. I noticed in the BGW email on Thursday that you expect the $15,385 per person max forgiveness will increase to $46,153 for employees over 100,000 annually. Can you comment?
It's possible that it could increase, because that would end up being a stretched amount, saying, hey, we're still trying to keep people intact and whole based on continued employment, even if you have reduced spending levels. But we're not, none of that's set in stone.
All right, this is from Scott. With recent changes, do you expect an updated loan forgiveness application? If so, when do you expect this will be sent out?
Yeah, there has to be an updated loan forgiveness application based on the changes that came out. And the last question is Exhibit A around guidance that's needed around a potential change that could be coming. So that being said, given that there's a 24-week time frame now versus the original 8 weeks, I don't know. You still can use the original application form under the 8-week time frame, so you can still go the original route if you thought that you were going to spend all the money. But in terms of a new application, if I had to guess, probably late July, maybe, only because there's no impending deadline on it, because anybody that was going to use the 24 weeks now has a much longer period of time. So there's not as much of a rush, I don't think, from the Treasury or the SBA.
Yeah, and just so anybody knows, there was a statement released by the Department of Treasury yesterday specifying what's going to be changing here, and they acknowledged the fact that they've got to issue new guidance. So stay tuned on that. All right, next question. Oh, Jack Santaniello has just shown up. He's
Hey, fellas.
Hey,
Jack.
man. Good to see you.
Is Adam's heart rate slowing down a little bit from having to go solo?
Yeah.
Well, he was really having to go solo because my computer, for some reason, was not, it wasn't connecting from an audio standpoint. I thought it was Adam's problem, but it was mine.
Oh, wow.
So,
Okay.
anyway, good to have you, Jack.
Thank you.
Yeah, so Jack is usually very, very punctual, but he was solving world problems for clients today. So he gets a pass. This is from Mike. If we used all of our PPP money, paid all the employees, as Adam suggested back in May, our loans funded prior to the effective day of Flexibility Act also moved into a 5-year repayment period instead of 2 years? Question mark. Wait a minute. That is, sorry, but Mike, it's an incomplete thing, and then it moves to anonymous. So I'm not sure if it is Mike or anonymous, but they seem to kind of flow.
Yeah. So there's two separate questions there. The first is, hey, we spent all the money and we've used our whole loan amount at this point, so could we go ahead and apply for forgiveness? The answer to that is, yeah, you could. You know, as we've mentioned before, you might want to wait a couple weeks just to see, you know, with new guidance coming out, if there's anything that's going to be favorable versus detrimental. So it's not like you're going to get a gold star for being first, but, you know, it wouldn't hurt probably to be second or third if you've already spent the money. The second part of the question is, what if I received the loan before the flexibility law was passed, and I anticipate that I will have a loan at the end? Well, on that front, as we've talked about before, I mean, they really tried to make this such that you weren't going to have a loan because they gave you 24 weeks to spend the money. Plus, they changed the spending ratios. But in the event that you do, the way that the law reads, I don't believe they changed this, is that the bank, if you were pre-passing the flexibility law, would have to modify your loan terms to adopt the 5 years. Otherwise, the 2 years stands. So the 5 years, I believe, only applied to loans that originated after the date of the Flexibility Act, which is going to be, you know, basically from now until June 30th.
I concur.
All right, cool. Next question is, if S Corp owners were paid salary through payroll and then distributions, can you use the combined total to meet the maximum for forgiveness?
No, you're stuck with just the W-2 amount.
All right, next question. We received PPP loan in April and are coming up on our 6 weeks. The number of employees we had at 2/15 was 65 and a half employees. We had a couple employees quit on their own and one employee that we do not intend on bringing back. What's the calculation for the decrease of 3 employees?
Well, under the new guidance, you may not have a decrease because as long as you can demonstrate that you've made a best faith effort to replace the positions that needed to be replaced, and the one person, you know, left of their own fruition, you know, you didn't lay them off and then not replace them or even try to replace them, then the way the new Flexibility Law Act, which does go retroactive on this piece, is that you would get to count those FTEs. So I would really look at your facts and circumstances to say, you know, did we try to replace the people and we just can't find them just due to the nature of the position or not? There's no guidance on how do you prove whether or not you tried to replace the position. Is, you know, having an ad on your website enough? Is sending out an email to your contact chain, you know, enough? Is, you know, using a recruiter enough and not finding any qualified candidates? But assuming that you can satisfy those tests, and I would ask Jack to chime in on this one, you probably could count them. Now, all that said, if you find that you cannot count them for whatever reason, then you would be reduced by, you know, well, you take payroll costs times 62 divided by 65, and then divide that by 0.75, and that's your max forgiveness amount.
Yeah, I would say a couple things on that. First, you know, use the forms and the formulas to get that right. But a couple things. So first is this harbor for reduction and then reintroduction or getting back up to speed. I'll just read from, you know, the safe harbor deadline has been extended to December 31st, which means borrowers can avoid reductions in forgiveness if they reinstate their FTE counts and employee wages to pre-pandemic levels by December 31st. And then as far as the rehire exemption, the Flexibility Act modifies or basically says you're not penalized and you don't have an impact under 2 circumstances: inability to rehire individuals, they had to be employed by February 15th, and an inability to rehire similarly qualified replacements for such positions. Again, that bar has moved to December 31st from June 30th. Or, and this is added, inability to return. I say added specifically, but this was kind of swirling in the background already anyway, but now it's pen to paper in the act. Inability to return to the same level of business activity as of February 15th, so that's the benchmark, due to requirements or guidance from the Secretary of Health and Human Services, so HHS, the Director of Centers for Disease Control, so the CDC, or OSHA, Occupational Safety and Health Administration, related to sanitation standards, social distancing, or other COVID-19 related worker or customer safety requirement. So I go back to something that we've all been saying consistently, which is documentation, and clearly stating, what went on, why there was an offer, why it was rejected, or why you didn't make that offer. For example, have a lot of clients who are just not ready. They have not set up their offices. They have not set up the parameters for physical distancing. I still don't like the term social distancing because it just implies that, we want to be socially close together and hang out, but physical distancing and other protocols to keep workers safe, and implementing those protocols so that, it may be that I wear a mask not to protect myself, but in case I have it and I'm carrying it, that I'm not somehow spreading it. So things like that need to come into place, but it's those kind of things. So document the reasons why or why not you're doing things, and why or why not your employees doing things or coming back to work, essentially, is the message that's embedded in these changes. Gary?
Gary? He's messing around with his computer a little bit. There we go.
There we go. You've been muting me and I've been trying to unmute myself and my computer's been restarting. Oh my gosh.
We're going to have to sing. Thank you.
Oh man. All right. So this is actually still from Mike. So I asked if we had answered his question. He said, thanks, Adam. I did get a gold star from the employees. My question is, I have a little money left. I can use the 60-40 rule, right? And spend the rest on rent, electricity, etc. since my accounting was at 75-25.
Yeah, I mean, if you still have a little bit of money left and you're at 75-25, there's no reason you couldn't go to the 60-40 number. The FTE rules, are still going to apply. So assuming that you still met the FTE requirement, you should be in pretty good shape. But as Jack just mentioned, even the FTE requirement got a lot more liberal. So if you didn't fully deploy the money, you got two options. One is stretch the clock out to use to get to your number, or alternatively go 60-40 route. You just got to make sure the FTE count is back where you need it to be.
And just since we're talking about the 75-25, 60-40, so the way that the Flexibility Act is written, or perhaps interpreted literally, is that the 60% is a cliff. In other words, you hit 59%, there is no forgiveness. And that is not the intentions. And that's, some interpretation. So somewhere between now and the Flexibility Act getting through, there was a press release, and I'm not sure if it's SBA, Treasury, or jointly, or whomever, but they basically said, hey, we're going to provide further written information about and guidance clarifying that if you don't meet the 60%, it's not catastrophic, that there will be partial forgiveness as it was under the 75-25. And so more to come on that, but I thought I'd share that, because I've been asked that when people are reading what's out there and saying, okay, now they've turned it into an absolute, either you're in or you're out on the forgiveness versus being maybe partially in or out, partially out. So there will be more to come on that, I assume.
Gary, we got nothing from you. Hold on a second. Let me unmute you. Okay. You should be good. Fired up.
Okay. Thanks. Man, I'm not releasing control ever again.
Power.
The question is from Raymond. Can I keep PPP separate from an EIDL loan?
Yeah, I mean, when you say keep separate, the grant's going to apply against your forgiveness. And during your cover period, you should be using PPP money for PPP related costs, which are going to be payroll, rent, and utilities, and then EIDL money for the other qualifying things, which are generally your other OPEX, catching up back payables, making debt payments and stuff like that. So in terms of commingling the funds into one checking account, you could keep it as separate accounts. That probably would be a best practice, but it's also going to create, some administrative burden. So you're going to have to evaluate your own record keeping capabilities relative to that, because ultimately we think that if you ever get audited, it's just going to be more of an expense reporting exercise with some documentation of proof. So the separate accounts could be a best practice, but that could also potentially be overkill if it created an administrative burden.
All right, next question is from Joe. Is it definitive that PPP funds are not taxable?
No, it's definitive that they are taxable. Unfortunately, right now, it's the exact opposite, which, I mean, hey, thank you. This was helpful. But right now, they're taxable, which is not the intent of the original legislation, but they have not fixed it yet. Jack, you got anything to add on that one?
Yeah, they're going to have to fix that. I mean, it's kind of like, give with one hand, take away with the other, and that's not intended. So there's going to have to be some reconciliation of that. If you kind of recall, basically, generally speaking, forgiveness of debt is a taxable event. So we're really talking about not necessarily the loan, we're talking about the forgiveness aspect of it. So again, more to come on that, I'm sure.
All right, next question. This is from Mike again. Revisit the FTE route. What does that mean again?
Well, so while they changed everything in terms of the FTE, like 60-40 split, the length of time, you still are supposed to rehire people. They've just given you a longer window to have the rehiring done, which is through December 31st. And then secondly, they've also liberalized the rehiring criteria, meaning that, it was, hey, you got to make an offer. That person, you have to have written rejection of the offer, and then you need to notify unemployment. Bam! So they don't receive benefits. Or they need to send you in writing, I'm not coming back because I'm taking care of grandma or something like that. Well, they made that a lot less restrictive, still no guidance on it. But basically, look, if you try to replace a position, that's good enough. No definition on what try to replace, really is. The other one that I forgot to mention too is that if somebody left, if you terminated somebody for cause, you got to take credit for them too. So the only case where you would potentially be in a problem, well, actually, they've even made it more liberal, which is, hey, and you also, if for whatever reason you can't replace a position because you're still in a downturn, meaning revenue still deteriorated, and you just don't need that many people, that also gives you a pass on the FTE count. So the only scenario where you would potentially be screwed on the FTE count, because it's still part of the calculation, would be, I can't prove that I was down. I didn't terminate it. I didn't terminate anybody for cause. I used COVID as a one-time do-over on all my past hiring sins to slim down my team, and then I never replace those positions, but I also can't demonstrate an actual disruption. That's the only case that I can think of where your forgiveness would potentially be impacted. What do you think, Jack?
Yeah, I mean, I think that's accurate in a sense that they've given more leeway in the penalty aspects of not bringing people back, recognizing that, even as we're talking here today, there are many businesses that are not open, so there's not work to be done, but then there's also people who are not ready to come back to work because they don't feel safe. So, trying to balance all of the competing interests, and making it fair and acknowledge that the there really shouldn't be a penalty, or maybe said differently, a reward for people coming back to work in an uncomfortable and potentially unsafe situation. So I think that, yes, it's been opened up a little more for the benefit of having people come back later. And so the sting of not having those people come back is lessened over a longer period of time.
All right, next question. Do you think there will be a more simple loan forgiveness application for sole proprietor and self-employed? So I'm going to just put my own commentary and then you guys can chime in. But, you know, the question is, this is the government. Have you been to the DMV lately? No, I'm just kidding. So go ahead.
Well, I don't know. Maybe. You know, because a lot of sole proprietors still have employees, so that's the most complicated portion of the form. So if you still have employees, I don't see that getting a lot different.
Yeah, I would say the form, I think, is meant to have the common denominator between all aspects and types of employment. And so for those that, you know, whether it's NA or 0, and you just kind of plug it into a formula similar to what you do on your taxes, if it doesn't apply to you, you skip it, or you put a 0. And so I would doubt that there is a, you know, a PPP loan forgiveness application easy letter form coming our way.
Let's hope that there is, but let's prepare as though there will not be. Next question is, how does the new 24-week period affect FTE test? Will we now need to calculate the average weekly head count for 24 weeks compared to the look back period?
I think that's what it looks like, with the safe harbor still being December 31st instead of June 30th.
Yeah, I think that, again, back to, you know, how things function, we're at a point where we have a U.S. federal law that has been put into place, and then you have the regulations and interpretation that go with it. And so, you know, there needs to be the SBA Treasury has to go in and interpret and sometimes fill in the gaps, fill in the blanks that are not in the legislation. And as we've seen, sometimes they may get it wrong or may misinterpret some things with respect to, you know, many weeks ago when, you know, self-employed people were, you know, or you could count the independent contractors in your head count, and after you couldn't. So there will be course corrections and interpretations and potentially possible reversals of positions that the SBA takes and call that further interpretation. And hopefully it will not impact those who do what they're supposed to do or do what they can do with respect to loan forgiveness, meaning applying for it, that it doesn't penalize them for being early on in that process.
Next up is, I'm a one-person S Corp. For 2020, I've taken a salary through QuickBooks, but I did not hold any didn't hold any taxes out since I would have paid them quarterly from my personal account. For the second quarter, I started tax withholding and payment from the company account. How will this affect my forgiveness of PPP loan?
What ultimately comes down to, what did you pay in gross wages? So as long as you're reporting gross wages, which would have been inclusive of your tax payments on the W-2 as if you were the employee, then that amount should be forgiven.
All right, this is from Scott. The current loan forgiveness application with all of its schedules is difficult to understand. Does BGW have a simpler Excel spreadsheet or document that could be provided to us?
So say that one more time, Gary.
The current loan forgiveness application with all of its schedules is difficult to understand. Does BGW have a simpler Excel spreadsheet or document that could be provided to us?
Yeah, I think, you know, we have some templates that if you want to direct people to the website, that could be helpful. All that said, the forgiveness application is much like a tax form. So that's almost like saying, hey, do we have a simplified version of my corporate tax return that I can fill out? Unfortunately, this is more complicated than the original application form. So even our templates are not, you know, not as easy as the original application piece was. And the other thing that I point out too, we have received a lot of emails from clients, and this isn't meant to be a scare tactic. It's just a, you know, hey, this is what I've seen so far. Maybe it'll change. We have seen some of the payroll companies start to produce reports that's supposed to be, you know, your forgiveness number. You know, just be careful on that, because remember that there's some time that you could count on the beginning and then there's some time that you can accrue on the end. So I don't know if I would just say, let me take the report at face value without some additional work and diligence on it.
All right, next question. We're a staffing firm that had 44 W-2 contractors working at clients in the look-back period. That number has been steadily declining during the 8-week period. If I think it might get worse over 24 weeks, should I opt for the 8-week period versus 24? I can't control if my customers are letting our contractors go.
Well, I think in this specific case, you'd fall under the exception, which basically says, hey, if your business is experiencing a downturn and you just can't replace the position, then you're not going to be penalized for that because there's been a disruption in your business. What do you think, Jack?
My understanding is that there is as far as the covered period goes for use of the funds, subject to the extension that, so you have, and I think, again, this is Jack theory at this point, but I think it may be accurate, is that the Data Flexibility Act enactment is a line of demarcation between those who received their funds after that date or before that date. The before date, I think you have the option of the 8 weeks or the 24 weeks. If you're on the other side of that line, I think you have the option of the 24 weeks or December 31st. What I don't know is that if it's after, well, I mean, it's I guess impossible to have an 8-week period at this point if you received your funds after the Flexibility Act. So that's probably why implicitly you don't have that 8-week period option, because you hadn't received the funds yet. So it's impossible. So I think that is the line of demarcation. Don't hold me to that just yet, but I think that is accurate.
All right, next question is from Mike. Where is the forgiveness application? Is it on the SBA website or at Treasury website? And I just Googled it. And if you just put in PPP Loan Forgiveness application, first thing will be a PDF that goes to the Treasury Department's website. Any additional thoughts there, Jack or Adam?
Nope, you got it.
All right. Next question. I understand FTE is easier to meet, but in our case, we have the same number of employees as we did when we got the loan. Problem is that our employees work a lot more overtime during both of the comparison periods than they have during the 8 weeks, not 24 weeks, and their average hours are not over 40 hours, so they're not counting the same as the same number of FTEs. Thoughts?
Well, you still would need to deploy the money, I think. So you still are going to spend the money, but you've got a longer duration now spend the money. And in this case, you probably would fall into the exception of, you know, look, I don't have the business available. So, I mean, you would presumably need to demonstrate that there's a revenue decline associated with this fact pattern, because otherwise, hey, if we just drove a bunch of efficiencies, you know, that's probably not going to be a good excuse for you to not have replaced the headcount.
Any additional thoughts there, Jack?
It sounds like a math formula with respect to numbers and overtime and, not exceeding numbers. So I'll defer to Adam's comments about that. But I think that, yes, I mean, it has to, everything that Adam said is accurate, but I would encourage the use of a spreadsheet and the application form to make sure you're within the parameters.
Well, I think you're wise to defer to Adam because I heard that his nickname in college was Rain Man. I don't know if that's true, but seems like it would make sense.
Yeah.
So,
Blue to Parsons, so it was not Rain Man.
all right, next question.
0.
Next question is, do you reduce the FTE if reduction in pay is due to employees having used up his vacation and sick days? This is from Mike.
I mean, this would assume that you've got unpaid leave in that case. I mean, if it was paid leave, that still counts, and you count those hours as part of a full-time equivalent. If it was unpaid leave, I mean, I guess you could say, hey, that qualifies because the person was taking it due to COVID-related reasons, possibly. But at the same time, you have such a long test period now, 24 weeks, that presumably the same employee had the same leave pattern in the prior year. I am wondering the impact it would really have.
Yeah, it seems like you'd be within the money and permitted. I think it does go back to if there is an issue, what the time off was taken for, if it was COVID related or not. And that's really subjective. I mean, not only your own health, but people who have people to take care of or whatever reason. I know people that have found out that they have been exposed. So after the fact, and they are just self-quarantining for 14 days, just in an abundance of caution for the people around them. And in fact, whole families that are now locked down in their own houses just to make sure they get through the 14-day period. So circumstances change, the time frame has been extended. So it seems like that would not be an issue, just generally speaking.
All right. Well, we have had 115 people on this webinar in spite of my technical difficulties. So thanks for bearing with us. Are there any other questions out there that we need to answer? Just as a reminder to everybody, we will have this recording, as good or bad as it is, up on our YouTube channel at the BGW CPA YouTube. Just Google that and it'll be up later on this afternoon. We'll be back on Thursday morning at 11 a.m. again, and we'll probably, hopefully have some new guidance back. Got another question here. This is from Greg. After we've burned through all the PPP, can we start using the employee retention credits?
That's a maybe. So right now, the IRS guidance says that you can't have PPP and use of the retention credits. And the position is period, ever. But that doesn't, a lot of the people in my line of work think that that's a bad interpretation because, if you think about the original intent, hey, we're going to give you some money to keep people employed. And when that's exhausted, or if you otherwise didn't qualify, you can use these credits to keep people employed and paid. So while we agree with the concept of not double dipping, meaning, don't give me money to pay people and then give me a tax credit for it, because that would be double dipping, way worse than even not getting the benefit of the deduction. It doesn't make sense that once you've exhausted the PPP funds, if you're going to keep the people employed and you're still in a disruption or otherwise qualifying event for the employee retention credit, that you shouldn't get it. But all that said, the IRS interpretation is that you don't get it. We just think that that's faulty, faulty guidance on the part of the IRS. Very similar to, we think it's faulty guidance that you can't deduct PPP expenses because that's contrary to the intent of the law. We also feel like use of the retention credit beyond the PPP period is also a faulty. Not allowing that is also a faulty interpretation, but to be determined.
Yeah, I would agree with that. I mean, think about it this way: is that I think that a lot of this, the original language, the original intent was within a finite box of time. And once you do something and then expand it out, it has a ripple effect on other things. And so, yes, the original intent was to not double dip, but is it really double dipping if you're using the money essentially sort of for the same purpose, but for different time periods? Or when, if you look at them as two different pools, that you're not using them at the same time, you're using them at different times. So I think there'll be more to come on that as well.
Okay, we got a couple more questions. Anything in the legislation that's addressing this now from Greg?
If this is specific still to the employee retention credit, no, they were silent on that.
Next question. We're a restaurant company and the gross wages include tips earned by employees but not paid by the company. We will use all of the loan money in 8 weeks due to the massive and unexpected increase in business. What happens when gross wages absorb the loan funds on paper, but there's a great deal of money remaining in the PPP bank account due to unpaid tip allocation?
I think that is what it is. I mean, meaning like that's just leftover funds.
Yeah, I don't think that's been addressed. I mean, the fact that you outperformed what the estimates were, what the formula was, I don't know if that's been addressed. I hope they don't go back to start talking, having some sort of second look at people who still have funds left over and say, do you still have a need for them? And say, if you don't, you got to give it back, and start creating some sort of regime of giving back the money based on lack of necessity currently versus what you calculated several months ago. One thing before I forget is that as far as deadlines go, and since it's June 9th, we're close to the June 30th date. One benchmark or mile marker that has not been moved is that, and I can't imagine there's a whole lot of people that this would apply to, but if you have not applied for PPP loan by June 30th, that is still the deadline for applying. That has not been extended. Now, I say that probably not a lot of people, but there may be people who either thought that back in, we were talking about, do you have to show a need for that? And then there's the $2 million marker. And so maybe there are people who over the course of time maybe didn't apply for the PPP funds, but maybe find themselves in a different situation, economic situation, based on some assumptions that didn't come to fruition, meaning getting back to business sooner than later. And so there is a potential need for it. So understand that you only have a few more weeks left to be able to apply if you haven't applied yet.
Yeah, that's good stuff. Just to reiterate, there was this news that came out from the Treasury Department and a joint statement actually from Mnuchin and the SBA administrator, and it just came out yesterday. So one thing that it does say, it says, and I grin when I read it, but it says SBA in consultation with Treasury will promptly, and that's what makes me grin,
air quotes,
promptly issue rules and guidance, a modified borrower application form, and a modified loan forgiveness application implementing these legislative amendments to the PPP. So if you want I would definitely Google that. I mean, it covers the stuff that we've talked about, which is the extension from 8 to 24 weeks, the 75%, 25% change to 60/40, safe harbor restrictions, safe harbor reductions on loan forgiveness, and increase from 5-year maturity from 2 on the loans, and extend deferral payments of principal, interest, and fees. And it does say that June 30th is the last date in which you can apply for loan application. So every bank that I have talked to, and especially the ones that have done kind of last minute heroics after the second round, none of them are taking applications as of yesterday, but Cabbage, from what I understand, with a K, and I also heard PayPal may as well. So I don't know that it's applying to many people that are on this call or on this webinar right now, but just so you know. Anything else that you guys would add?
I don't think so right now.
No, other than on the comment about the revised form, I don't think that that's going to help the person who asked. Is there going to be a simpler, easy form for sole proprietorships, independent contractors, or as you read, the intent is to update the print that is actually on that piece of paper on that application to have the correct dates and things like that, so it's not misleading. So that's probably what the revisions are about, not to create the short form of application for forgiveness.
Yeah, just to reiterate, that application is an 11-page application. So maybe they'll add more pages. Who knows?
Yeah, the only I guess, you know, since you guys brought it up, the only thing that I would add is that I don't remember if it was the U.S. Chamber or who it was specifically, but somebody has lobbied like any amount below $150,000. So it's possible small loans could just be, you know, you are, so let it be written, so let it be done, you are forgiven. But that's not official. That was a proposal. The lobby was to try to make anything below 150 grand, just an automatic grant.
All right, well, seeing that it looks like we have raced through all of these questions, and it is straight up noon. You guys did an excellent job. Thanks for joining us. Jack, thanks for taking this thing and by the horns on the front end of this, Adam, and doing a great job again. It's good to have you back. We'll be back on the same bat channel on Thursday. Thank you for taking time. And again, we'll have this thing up on the BGW CPA YouTube channel later on this afternoon. You guys have a wonderful day out there.
Thank you. Stay safe and healthy.
All right, bye-bye.